Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer here at Worth Asset Management. Today is July 3rd, 2023. Happy early Independence Day. I'm going to go over your three threes for the week. The first one being our top 10 major asset classes, their performance, and how we are positioned on the short-term and intermediate-term basis. The second being our chart on the S&P 500 on a short-term basis and our support and resistance zones. And the third being our top three market movers for the week. So let's jump on in.
Okay, let's go over the top 10 major asset classes, their performance, and how we're positioned on a short-term and intermediate-term basis. On a short-term basis, there were no changes. We're still bearish on the US dollar, bullish or neutral really on the bonds, but it says bullish. S&P 500, NASDAQ are bullish. Last week, the Russell 2000 or small caps, the world and emerging markets turned bearish. Real estate is bullish, gold is bearish, and commodities are bullish. If we zoom out to 3 months, which gets us into the intermediate term range, which is less than 3 months, greater than 3 weeks, we are bullish across the board. Real estate just joined the party. Now it just turned bullish here recently, and gold and commodities remain bearish on an intermediate term basis. All right, let's take a look at our positioning on the S&P 500, our equity market benchmark. And as you remember, we started adding back in the end of March, and it's been a nice little run up 12% since that time. Now let's look at the support and resistance zones. Last week, we were coming down to the bottom of this resistance zone. It turned out to be support, bounced right back off. And as we head into earnings here in the next week, over the next 3 weeks, we'll see if that continues to stay in this zone, or if it breaks out, or if earnings are projected to be weaker than normal. We could come down and test this 4,200. It would probably be healthy for us to digest some of these gains and come back and do that, and then bounce off of that level. We shall see in the next 2 to 3 weeks. All right, let's talk about the top 3 market movers for this week. Today, it's an early closing because of Independence Day tomorrow. So it's a half day today, and then we're closed. The markets are closed on Tuesday. And then on Monday, we'll also receive the PMI readings for the Institute of Supply Management. Projections are to come in at 47.5, which is still below the 50 level, and which means we're still contracting and not expanding. We'll see what those come in at. On Wednesday, everyone will be waiting the Fed minutes, and that will be basically what the Fed is saying at their last meeting in June, where they actually paused or skipped for the first time after 10 consecutive rate hikes. But if we fast forward here over the next 3 weeks, the next meeting is in July, and right now there's a 90% chance probability that they're going to raise another 25 basis points, but we have 3 weeks to go and a lot of data coming in, so we'll see if that number changes. On Thursday and Friday, we got jobs numbers. We have JOLTS on Thursday, which tracks the number of openings, hires, quits, and separations for the month of May. They're projected to have fallen 9.9 from 10.1, so we'll see if that's in line. Also on Thursday, we get the private sector payrolls, which have projected to have risen a little bit up to 180,000. And then Friday is the non-farm payrolls, which is the big number. Right now, they're projected to have come in at 200,000. And last month, they were at 339, which was a huge upside revision. So we'll see if those numbers kind of die down, and we'll see what the revisions are for May, if there are any. All right, that's it for this week. Thank you for joining us. Our next update is Monday, July 10th. Have a wonderful, happy 4th of July, and we shall see you next week.